This is London with Bitcoin Spike VIP Trader. We're going to go through the market open in New York. We just hit it into an up. Guys, a bit of a flash up here on Tesla. Shout out to all of our traders. Hope you're doing well. What did we hit on Tesla? Just so that you know, we were in a fan formation. Okay, looking at that resistance, flip to support, that resistance, flip to support, resistance, and boom, guys, up again on the fan. New York Institute of Finance will cover this pattern. A little bit cautious yesterday in terms of NVDA, without a doubt. I'll let you guys know if you wanted to take a seat at a blackjack table. It was a bit, guys, uncertain in terms of, I just say, murky waters. We've opened up down on NVIDIA. It's kind of my impression. It's like kind of a risky shot. I wanted it to go to the upside, but looking underneath the specific 1 hourly. The specific 1 hourly is in play. Looking at that cap line feature, and we will dig into the details in terms of, we kind of missed the very open there. Let's take a look at Bitcoin real quickly. Bitcoin having a bit of a frustration over a rising wedge. Okay, that rising wedge, we've got that real difficult zone over the rising wedge on the 30-minute. Always an area of concern. Remember, this is London. Former hedge fund owner. Guys, private, non-SEC, not financial advice. Let's dig into and pay attention to Tesla, see what we can catch right off the get-go. Now, the question here is going to be the following. Good commentary here by Bitcoin, because yes, we have a rising wedge here. These are the options in terms of a fan. If you trade them frequently, you know this. The dynamics in play. This is not a classic Gann fan. This is a fan reversal pattern. You'll have to look at Murphy. Remember yesterday I brought your attention to the 278 as being the level to focus on Tesla. Why is that? The 278 is the 50% max completion that we are looking at in terms of, and you'll see that level engage, strike hit 278 on Tesla, and a bit of a recoil. That's nice. That means traders are taking at the specific 278 with, guys, nice move to the downside, a 0.5% move to the downside. Very nicely done if you were plugged in yesterday to the stream. You just caught a flash trade, bam, at a target at 50%. Remember, fractional completions. Remember, not just fractional completions, guys, but max probability, maximum probability is that 50%. Target to the upside. What does that mean? That's 50% of the amplitude of this specific pattern, the specific curvature and the handle. Boom, with a frustrated, absolutely a frustrated kind of launch zone here, reconfirmation. Nice to see again. Let's tag it, let's mark it within the first. Let's look at this, the first 2 minutes of price action, really before then. If you decided to carry in, again, guys, it's not without risk, but as you learn to work into the specific, let's say tomorrow's open, it's just important that you be able to assess these dynamics. Now, Bitcoin providing a bit of commentary for Tesla immediately. In Bitcoin, we're dealing with this specific issue, right? In terms of the rising wedge, we're looking at the 5-minute right now. You'll see the golden short line, our short line, engaged, boom. The specific commentary here is the following. We're up and over a rising wedge. Let's take a real quick look again at Bitcoin in terms of what she has, let's say the commentary that she can provide. This is typically a no-go zone. If you want to launch into a trade, we would just suggest, if it's long, not to be up and over a rising wedge. Now, this is the specific characteristic that in a really strong market, you can get a curvature and handle here, and it really requires some momentum to the upside. You know that. But typically, we would expect this to be the catchier area on a rising wedge would be up and over the specific level of resistance. So they're respected as such. Trade a couple hundred of the patterns. Make sure that you understand the dynamics in play. Without a doubt. Now, NVIDIA just hanging up along as well and pushing quite a bit, but on that specific hourly 20 moving average, that's the area level of concern. We're seeing that trade right now. Traders are engaged at the specific hourly with a real tight spread, kind of a tight open, 0.35%. Guys, in terms of 0.25, 0.35 on Tesla to the upside. Get in the inclination here that we may want to back off just a touch and take a look at some patterns in play on Tesla, on NVIDIA. Let's say on NVIDIA like we have on Tesla. Okay, now if you were trading Bitcoin and took this move here, congratulations. I'll just say this, we hit our target, very nicely done. What's gonna be the question 9 out of 10 times, or 10 out of 10 times when you're dealing with a fan? What, and this is the Tesla chart, what's gonna be the question when you're dealing with a fan reversal? If you don't know what a fan reversal is, you are missing the market. I will tell you that unequivocally. You're missing the market. You may think you've got A to Z covered. You don't if you don't know what a fan reversal is. You guys know this without a shadow of a doubt, those who trade frequently. Now, in terms of the specifics, let's look at what is that question 10 out of 10 times. Let's really digest that. What is the question in play in the chart that you see immediately? With price up and over, pay attention, with price up and over an additional level of a fan. Now, you're going to see a level of resistance, okay? You're going to, first of all, you're going to have a seat on the fan. You need a seat on the fan. This is, guys, this is some very high quality TA. Run it by Murphy, John J. Murphy, run it by New York Institute of Finance. You see the seat of the fan. This is going to be the array seat where you have a level of established resistance right here with hit 1, hit 2, okay? Hit 1, hit 2, flipped to support. Then the array comes into play again. Hit 1, hit 2, flip to support. That resistance, right? Hit 1, hit 2, flip to support. Then hit 1, hit 2 on the next leg up as we climb the ladder up and out through this fan. Right? Hit 1, hit 2, resistance, 2 lines, 2 pivots, hitting resistance, flip to support. Now back to the array seat. Hit 1, hit 2. What is the question 10 out of 10 times if you're up and over this? Will we see a hit back onto prior resistance to attempt to confirm as support? It is one of 2 ways that this pattern can go up. And you know, we do have some launch codes that we can essentially expect, guys, in a great case, in a great scenario. A launch code would just mean literally we are headed up, blast off time. However, we are always prepared. Literally 10 out of 10 times that we trade these, we are prepared to revisit from this array seat resistance on Tesla here. Welcome, New York is open. Congratulations to all the VIP who are trading. Hope you're doing well this morning. This is London. In terms of level of resistance, hit resistance on this fan dynamic with resistance, flip to support, flip to support, flip to support at every single, essentially if you're looking at an array, you could call it a vector, etc. But this is going to be the question. All right, now, you'll notice that we're in a rising wedge. You say, well, that's definitely bearish. We're in a rising wedge. When we see a rising wedge, be advised of one thing. To beat a rising wedge, we will always look for a specific fan. So as you see a rising wedge, as you approach these challenges in the market, I want you to try and start to identify a fan pattern formation. Please, if you will do that, you will find that it's a nice trade opportunity to get involved in fans that can actually beat a rising wedge. All right, it still requires the momentum. You've still got the dynamics in play, and they're just nice dynamics. For all the VIP in the back, you guys know this is the coup de grace. This is it. This is where it happens. A lot of the action happens in terms of the specifics. So let's recap first of all from yesterday. We did hit into that 278. Love to see that. Very nicely done. Almost into that golden pocket. You're going to have some variable measurements here in terms of where Tesla hit. We're really at a muted open. Tesla at point almost flat right now on the day on the open. You're seeing that level of resistance respected, and what's going to be in play immediately pickups along this level. Will we require some additional patterning in here like we've had here with this specific rising wedge in effect? You're also looking at some lower levels, preceding levels of resistance, pivots as strong entry points where orders are being placed. I like it the first 2 minutes. We had some trade opportunities, including up to the 278. All right, if you were targeting into that maximum completion yesterday, saying, okay, I understand we had a specific, if we look at this, we had a curvature and a handle, and we had that maximum, guys, the maximum probability, meaning most of these patterns will complete to the 50% upside. Now, people will say, well, will it go higher? Will it go up? I just tell you what the maximum probabilities are. Okay, they are the maximum probabilities. If you stick with those over time, you will do well based on the preceding 4+ decades of information that we have from the market available to us. Let's zoom out a bit. Let's look at NVDA. Let's see how NVIDIA is doing. Yes, 20 moving average, paying a bit. However, in terms of a short here, not much, guys. It's tight on NVIDIA. I keep thinking I want to go back to pattern dynamics on NVIDIA. Let's go ahead and do that. Let me see if I can pull up a few details. What exactly is going on? We talked about a specific pattern formation on the 30-minute yesterday for NVIDIA. It was a flag type formation. I told you we could be, guys, so lucky to see. And I didn't say so lucky. I wanted to see. Bottom line, I'm excited about NVIDIA. You guys are too. But with the confluence that we had with that daily specific 20 moving average, I really wanted to see buyers just try and rifle this to the upside. What did we get? We got the specific support to resistance parallel carry up set, just mark it, and boom. So we are going to be forced to look at a pickup in this zone without a doubt. Potential mid-level in terms of a partial return. Now, as you look at any type of a flag formation, I want you to distinguish or always consider the following. As you're looking at, well, this is a bull flag, there are two ways to look at a channel like this in terms of its how it's presenting a specific opportunity to designate a pattern structure, okay? So it would either be a pattern within and itself. You would either look at a move to the upside downward sloping channel. That's classic of a bull flag. We'd like more of a flagpole, right? Without a doubt. Otherwise, we're looking at almost a measured move, meaning less of a real bull flag. Bull flag, we expect bigger moves. Technically, it's still there, but we would like more of a specific flagpole. In terms of the preceding, let me finish this specific thought for you. Or for myself so that I can deliver it to you. But looking at the framework here, you have two options. One is we have potentially the bull flag. We'll say definitely we have the bull flag. The other option when you're looking at a specific, anytime, and please pay attention to this, mark this, anytime that you are looking at a specific channel feature, okay, anytime you're looking at a channel feature, channel here, okay, that's the second channel, channel here, first channel, so first channel, second channel. Forget the flagpoles for a moment. Anytime that you're looking at these channel features, you could be, and you need to be on alert for, whether or not you are exactly designing part of the internals of, or let's say the interior of a specific overall larger pattern. Okay, let me explain this real quickly as we watch bulls try and pick up along a level of support. Kind of the cautionary tale yesterday that I said, and you guys got this, is we could, and this is just in flux. It's Friday, there have been some great trade opportunities, and we're just kind of in flux on NVIDIA, right? We can stammer around on some different time frames and show into what would be a nice potential, I'd say potential bear flag here. What would be the problem? I'd really like to see more of a move down then this specific upward slanting channel formation before, boom, I can have a real nice, I want a solid line down to repeat before I'm just going to say, this is exciting, let's get excited about a bear flag, right? And while we're talking about the 15-minute, let's discuss this before I go into the details. And this will be a nice little Friday recap in terms of some of the essentials that we're looking at. You've got we've got a bit of a triple top head and shoulders pattern going on right now. That's going to trade in terms of shorts engaging right now, with the compromised fact that we do have our specific 15-minute lower pro line engaging. So that's the level of support that bulls will try to hold at this level. And you might be able to see that a little bit better if I can clarify this screen. Let me do this, and you can see right in here our specific, there we go, our specific, it matches up with the lower the lower pro line matches up with that lower standard deviation on the 15-minute, that second standard deviation on the Bollinger Band. Won't always be the case, but to the extent it could be microphone issue. Left channel audio is busted. Let me know if you have, oh, interesting, huh? I appreciate knowing that. It could be, and I mean, we probably just need to completely reframe, rework, and get into, what do we have here? Ah, yes, okay. It's either the microphones, I need to replace them. I'm gonna say thank you. Thank you, because we just have problems with Rode microphones. We literally recycle them. We should be part of the recycling committee for Rode microphones. So I appreciate that, thank you. We just got this set back in, so and it's difficult to convince ourselves that we need that we need 3 sets of microphones, right? Just for the backup, because they're such great microphones, we have to use them. So it's been a little bit, we have the wireless, you guys may know microphones or not. Let's get back to the technicals. Thank you for letting me know that. I'll try and repair that again for the specific afternoon if we close out here on Friday with the markets. Thanks for that heads up. Hopefully it's something you can listen to. Now in terms of the details, let's look at the head and shoulders. Let's look at how this would engage, okay? And I'll get back to this point in terms of a channel formation being a potential. And when I say this will engage, okay, out of the gate, I've got the trading view. Let's see if they have it. Yeah, they do. TradingView actually has this. I have to give them the, no, they don't, guys. They don't. Okay, TradingView should have this. I'd like to see this on TradingView. 2 patterns, and I'm assessing the specifics in terms of the auto patterning function. I'm just assessing that. I know you all are too as well. What I'd like to see here is the following. I'd like to see this specific falling wedge on NVDA. I would also like to see a specific head and shoulders patterning here, some sort of a topping formation there. Recognize when I say this something will engage, what I'm stating is the following. When we're looking at a level of engagement, I'm just saying there are orders below, okay? So to the extent that this will engage, really, to be truthful and honest, what I'm talking about is that 23.6 at least in terms of the patterning targets to the downside, that this is active, okay? Whether or not we can get picked up at this level, it's an active level. So when I say this will engage, don't think that I'm saying right out of the starting gate that we are heading down, boom, to this full completion. When I say it will engage, we have buyers set up on this specific at least 23.6. So these targets are engaged. You got it. Flash trading, boom. Micro trading, very tight trading thus far. What do we like about the specifics here? First of all, multiple opportunities to trade without a doubt. In terms of that, let's measure to see how. Let's see with what level of effectiveness here. About a 0.2 tight moves, guys, 0.2% move in terms of that specific feature. What we would say is we would like to ideally, and you know me, I like to target apexes of falling wedges if and when we can get below them without a doubt. Let me clean up these specific targets to the downside for a moment. Let me take these. Let me take off these arrows here real quick. They may be beneficial here in terms of the arrow features that we have designed into just another targeting tool that we have. This means on the 45-minute we're targeting to the downside, just so that you know. On the 77-minute or the hourly, we're also targeting to the downside. We have the hourly target to the downside, and what I would do is walk through this and modify. I have 80% here, just so that you know. That would be a specific threshold, okay? If I have met 80% to target on a specific Bollinger Band carry through, okay? 80% to target, then I wouldn't want to see this specific line here, right? So that would just be a little commentary in terms of what I say when I say something will engage. I'm looking for the engagement on the 23.6, guys, the 38, the 50, the golden pocket, etc. So that has engaged as of right now, and it's the bulls to hold on to and the bears to give up, right? Literally, it's the bulls to hold on to and it's the bears to really to give up at this point. Bulls need to, guys, they gotta push through this if they're going to do it. A lot of people looking for specific NVIDIA to go down. So I know that as a matter of just, I don't want to naysay NVIDIA. It's been great. Let's tune into Tesla in terms of that rising wedge feature. It looks just like what, guys? You have to look at it. This is Tesla. It looks just like Bitcoin. Bam, hit to the downside, 1.15% to the downside. And this is just going to scream in terms of an analogy that we can look at right now. Pay attention, because the specifics that we just saw on Bitcoin, I was hoping a bit more from Tesla. Why? Namely because of what, guys? Namely because of the auto workers just struck, they just quit on all the big 3 U.S. autos. I'm like, how can that not be good for Tesla? Anyway, aside from that issue, aside from what we wanted to see, we saw the specific completion into our target. That's what That's what hit it. And again, where are those orders stacked? They're stacked here, guys, at these preceding fan levels, and just ran out of steam. Rising wedge, just note it in terms of that specific move, just note it. Looking at some pickups along a green byline. Let's see if we've got, just looking at the specifics here. Let's look at the hourly near hit into the specific 20. Looking at the, let's look at this here real quickly. I want to find on the 4 hourly, the cap line had been really strong, or essentially capital control line. So some volatility coming into the mix on Friday. Let's just look at this in terms of the specific figures that we see. Shout out to J-Mac. J-Mac's up in the top corner right now. What's up, J-Mac? Looking at the red on the screen, we did pour down a bit. So we've got about a 1% move to the downside. I'll tell you this, in terms of the bears, okay, in terms of like whether or not you're going to trade a specific rising wedge, I'll just tell you, if you're programmed to be a bear, you're going to hit this. Guys, it's so difficult to try and convince a bear not to hit it. It's so difficult to try and convince a bull not to still power in up and over the top of one of these. You guys know. So you're going to define yourself in terms of that. And this, as we look at the fan procedure, this was just absolutely, we've gone through a bit of a collapse. What's the larger concern here in terms of Tesla? The larger concern would be this, okay? So we have an included micro rising wedge within this dynamic as well. And the unfortunate part, but we do understand well enough, would be the following. We really wanted to see this bull flag perform. It did take you for a ride, okay? If you chose to trade the specific bull flag, it did take you for somewhat of a ride here. It did relatively well. It was a slow crawling bull flag. You remember that. A couple of days ago in stream, we identified this. We had the NVDA that traded quite well. Let me take everything off the screen real quickly. Let's look at the bull flag just to remind ourselves kind of the week's price action, what we had to work with, because that wasn't bad. Right? That wasn't a bad move. In terms of the specifics, it did crawl around a bit, push breakout traders, which we always see. Almost always do we see those breakout traders get pushed around. What we'd be looking for immediately, let's just look into this. What we would immediately be looking for, any targets to the downside, targets to the upside. How am I going to assess? And I bring this up because we did have a potential nicer move in play. You understand, we did really have a potential nicer move in play. So this is just not what we wanted to see on something where we could have gotten some, I think, a bit of a reprieve given the UA workers, right? Given the UA workers. And Tony in the house. What's up, Tony? Hey, we got Venus in the house. And let's go, Venus. What's going on? Boom. Venus in the house, and Tony from Australia. What's up, Tony? Nice to see you. Apparently my right microphone is off, or one of the channels. I appreciate that heads up, and we'll get these mics correct if you have to just turn down a little bit of the noise, etc. I apologize for that. It's probably some, guys. Rode microphones, just beware. They're so great, you need to buy 3 or 4 of them as backups if you're using one. It's just the way it is, so unfortunately. Looking at targets to the upside, targets to the downside. Now, you know one thing that we like is expanding volatility. We like expanding volatility. I still didn't get back to the point. Let me get back to this in terms of what I was discussing, okay? In terms of, and there you do certainly see that specific topping formation. It's going to be the head and shoulders engaging to the downside. Nice move, really, on Tesla and on NVIDIA. Now, in terms of the specifics, anytime that you see a specific channel formation, yes, take note, hey, we see a specific bull flag. Also note, though, I want you just to pay attention to this, please, as you see internal channels being formed at all, and a lot of you swing trade, okay? And that's important for what I'm about to say. As you swing trade, please recognize, and you're probably well suited to recognize this more so than anyone else, as you were to see a specific, let's say, channel formation, or as you're swing trading back and forth. We've got, you guys, you're some of the best traders around. I'm going to honestly say that. But as you see specific, if you were to see a channel formation like this, all right, one trader's going to say, great, I have a bull flag, okay? Fantastic. The downward sloping channel with a specific move to the upside. Now, what I want you to be aware of is the fact that oftentimes you'll find pattern formations that are really built of nothing more than channels. Okay, so as you're looking at completions, specific completions, and as you're swing trading, please just start to be aware of the fact that your swing trade ranges, your channels that are formed are in the process most times of formulating some sort of a pattern dynamic. And in that specific case, we could call, I wasn't exactly trying to establish a pattern, but to the extent that, it wouldn't be difficult to do if we were to, let's say, go back up something like this, and we were to, line out something along the lines of, let me find my specific triangulation here. And if we were to look at something kind of like this, ultimately, if we had an underperformance in this specific zone here. So you'll find that your swing trades, right, your specific channel formations, right, you start to think, well, maybe we have a bull flag, maybe we have something else. Just back out if you can. And this is a good opportunity on Friday to go through the details of how your channels, how your swing trade channels and ranges can formulate that anytime you see a specific, particularly a flag or otherwise, but anytime you see a specific parallel channel, any type of a range defined, and swing traders are at it when you're at it, pay attention to what other patterns are being formed by those channels, okay? That's the level of construction, really kind of a constructor's view in terms of what we're looking at swing trading. What is it? Well, what is it actually? What's the result of it, okay? So we failed to break out up and over that 458 on NVIDIA. And again, I wanted to see it. You guys, I think, may wanted to see it again, or see it as well. But what I'll say is that there was some pressure to the downside. As we were to look at this, the guys who were short on NVIDIA in terms of being underneath that 20 moving average, why is the 20 important, guys? Pick the 5, the 20, the 50, the 100, the 4, the 9, the 18, the 21. Pick whatever you want. It is a measure that the bulls are there relatively or they're not. Right? They're either underperforming underneath the 20 or, in terms of the 20 moving average, just looking at the preceding 20 intervals here on the daily, the bulls are underperforming. The bulls haven't shown up quite as much as they have over the preceding 20 intervals. Okay, so that's highly relevant. We would agree, guys, that's highly, highly relevant. As is the fact that we're looking at NVIDIA on our lower pro line. Would be ideal to get to target, and it's nice to see. Our specific target is in line with our green buy line on NVIDIA. There's a lot of pressure to get here. You have people that have literally held here for a number of days looking for a hit down, and pay attention. There are groups of traders who are literally, and guys, pro traders are looking at the fact that we are underneath the 20 moving average. They want this hit, right? They want it. They've been waiting for it. It's just literally sitting there staring at them, and they're being patient, we would say, right? Preceding cross under the 20 moving average, flip back into the preceding, let's say that, I don't want to call it preceding level of support, however it is, that 20 here, flip to a resistance and boom, down through that standard deviation into a green buy line for us, right? Bam. So looking at the specifics here, a little bit of interest still remaining here, certainly. Shorts the bears are literally stacked at this specific 20 moving average on the daily. Right, but we're definitely, traders are being, asked to consider why have we not hit this? So I'm going to say this without mentioning names. I know some of the traders here who are looking for that move. Shout out to anyone who's short. And yes, let's look at the specific 15-minute. I don't like to, guys, upsell or down talk anything. If I see something that's risky, I'll let you know. If I see something that looks just clear as day, I'll also let you know. We like this move down and out of the specific, falling wedge, without a doubt. Let's get lasered into a pickup line that is, guys, it's rife with orders right now. Connect, I would please, on the 15-minute. Take a look at this bottom line support level, wick to wick. This area is loaded about in line with our green buy line, but you'll see that specific level of support that's loaded up with orders, like without a doubt. That is hot on the press. In terms of additionally, looking at this, we kept wanting to have a bit more of if we were looking at the 15-minute on NVIDIA, we wanted a bit more of a flat top. That's the bottom line. So we had to get a little creative in terms of the top patterning here. This is what made the specific kind of that trajectory to the upside a little difficult, okay? We had to strap into a specific left pivot to right pivot that wasn't flat. Okay, we want a flat top. Flat top's indicative of the fact that the buyers are in the market. Yes, buyers are in the market and prepared, literally taking a preceding pivots. This is within threshold, it's close, but we really want a flat top. If you can, guys, change a coil into a specific ascending triangle, we take the ascending triangle every single time. It's just a signal to the traders that we are in business, looking guys directly square in the face of, like, you know, kind of collective bullish activity, looking to hammer to the upside. So that's something that would have been nicer and would have given us a bit more reassurance in terms of the projection for today's open. So it was a risky endeavor to not have that flat top resistance. Just note such as we were to guys try and close out the day yesterday. And again, shout out to anybody who hit on Tesla, anybody who hit into the target. And it's just worth really guys digging into. Let's dig into the facts here in terms of that hit that we had on the 278, which was mentioned, that max probability. You just saw earlier on. You can rewind tape if you'd like to, but that was a direct hit on into target. And you'll just see the max probability is the max probability. So when we are confronted with the issue, you've already made money on a trade. I see this so frequently. Let's take a look at that hourly, trying to engage on the 20 for Tesla orders. We're waiting. Nice to see them pick up. As we were to look at the specifics, okay, in terms of you being in a position that I've already made money, all right, I've already made money, great. The question is, can I make more money? When you find yourself in that position, if you're not considering fractional completions, meaning you're trying to get to the 100%, right, in terms of a pattern dynamic and target. And you know, if you do know that you've already hit into the 50%, this is Tesla, look at pick up on the 20. If you are already at the 50%, whether or not you know that you are at a 50% completion level or not, first of all, that's potentially problem number one. Do you know if you've made money on a trade? Do you already know what your completion rate is? Do you know the accompanying probability in terms of achieving the maximum probability? It's not just, hey, this specific pattern is 51% likely to go directionally up or directionally down. And you know we don't care about 51%. We want 70+%, 80+%, 85 is nice, right? It makes it look easy. When we're looking at a fractional, and again, if you find yourself in a position that you've already made money, right, on a trade, and you are looking at the framework of wanting to make more money, and you're in that zone of not knowing, and you feel like asking or looking for external answers, I'll tell you, 9 times out of 10, that means maybe 10 times out of 10 that you don't know where you're at. You don't know whether or not you're at a maximum level of probability. You just don't. I encourage you to find the answer to that equation and don't waver from it. Don't let CNBC, don't let Bloomberg, don't let anyone tell you in terms of what your maximum probability is and whether or not you're, at least know the odds. Are they in your favor? Do you have a habit of taking profits, raking in the chips, okay, when you've reached your maximum probability? Do you? I will say, if you do have a habit of taking profits at a maximum probability, hey, you're going to be doing well. I'm just going to tell you. And that's going to be based on the last 40+ years of market information, highly sophisticated levels of, and highly tested last 40+ years of market data, every pattern. So dig into it. Bolkowski's the name of the game there. And you really have to get through, you don't have to get through all the data, but the more that you get through and the more familiar you're with it, I know that you'll find it worthwhile. So a little bit of encouragement here on Friday, just to not always take that easy road and find yourself, check yourself when you're saying, well, I want to make, am I going to make more money or not? If you're in that zone of more money, if you're participating to the max probability, no problem with letting a position ride, okay? If you're just that kind of a trader and you have to let everything ride, then you know it's going to ride. And you know there's not just a 100% right answer the whole time that you're looking for. So try and develop your trade game internally in terms of what you, and I just bring this up because this is the hot specific pattern on Tesla to be considering. What's my key framework? What's going to be in terms of probabilities? I want to get back to this level of resistance. When? At some point, right? Where's my value zone? Anywhere in here. Anywhere in here is great for Tesla, right? And within this macro dynamic, you'll find it in the micro dynamic. This was a real nice level to hit here as we watch Tesla continue to power up and up and up past a specific flag dynamic target. depending upon measurement, but into this level of resistance was beautiful. That was very, very nicely done, right? You'll find the more of these that you trade, okay, the more of these potential bump and runs, find these expansions, find a descending level of support, descending level of resistance, find these and trade them, trade the lights out of them. Try and trade 400 or 500 of them. Go for it. Try and trade 400 or 500 of them and see how you can, how you fare in that equation. In terms of the details, what was the name of the game? Let's look at Bitcoin, and it's just real similar, isn't it? Let's look at this on Bitcoin in terms of the frustrating factor here. See if we need to go to the specific. Let's see our time frame of choice, and Bitcoin and we'll say Bitcoin and Tesla are interesting travel companions, aren't they? They just are. We can go through specific time frames. I don't have this set up. I think it's on one of the major charts here, but looking at a rising wedge dynamic on Bitcoin, bam, hammered down early before the market. Remember, Bitcoin stole the show yesterday in terms of distracting a little bit of our attention. And what do we have on Tesla? Tesla handing out about the same type of routine after market open. Boom. So you can sit and say, but we wanted to go up. Well, we hit our maximum. Remember, we hit our maximum probability, the 50%. And when people, because they'll ask me frequently, and I know you guys, you may ask others, or you may discuss this amongst yourselves or family, even if your family trades or whoever your friends, and like, well, I just don't know if it's going to keep going. And when I hear that, that is nothing but emotion. That's nothing but, you guys know, that's nothing but when you're getting into the wishful thinking or the guessing phase. Get out of that. Get out of that. Know your exact probability of going up. Know your exact probability of a full 100% completion on this. Just know it. And if you're going to operate on that, you're going to be so far ahead of the game. You're going to know when you're at your maximum probability. That's the zone, right? When you watch Seth Curry on the floor and he's hammering in buckets. He's just literally just anything he throws up is going in. It is a difference of probability. I'm going to tell you that in terms of when Seth Curry throws up some a three-pointer or even half-court shot, it's just like that thing's going to go in. Just when you're at a maximum level of probability, don't dismiss how important that is to your trade game. Don't overthink it, and don't also try and get out there and hoop with the Seth Currys of the trading industry or the trading world if you're not really prepared to do that. In terms of that, and you guys are doing great though. In terms of our 100 rounds, I recommend you all get 100 trades in without a doubt before you even think about exposing anything in terms of any type of a capital situation that would be anything really meaningful. Have it be meaningful enough to where you have some slight skin in the game. This is just what we've seen be very, very productive. 100 rounds. Get into it. Get into your trade game. See what you've got going on. Make sure there's something that you can definitely pay attention to and that you care about. If you're paper trading, I think it could be really destructive because the habits that you're going to form around the specific habits that you're going to form around your trading will include you not caring about your trade. That's the biggest problem as we were to look at that. Your habits are going to include you not really caring about your trade. Say, well, I'll do that when I really have money in the market. Well, learn to care about your trades earlier on. I would say that. Learn to care about your trades and how to attend to your trade, the level in terms of how you need to be programmed. Please pay attention to that. Now, in terms of, let's look at this. We hit into the specific 50%. We hit into our golden pocket. This is on NVDA. We can assess this. The one thing you're going to want to look at, obviously, is do we have other patterns in play, right? Do we have other patterns in play that could get us to the 444? Of course, and I'm limited on this screen. Like I've got side screens that are loaded up full time. For instance, on Tesla, I've got my MACD just boom, ready to look at on every specific time frame. I've got the same thing on side screens, and I encouraged you all yesterday to get those side screens really working on all the assets you're trading so that you have this information just literally, guys, at your behest whenever you need it, just actively synced into everything that you do. We're a little bit limited here in terms of the specifics that we would look at for just a stream. So as we were to look at this, we're on a fractional completion basis right now, having hit that maximum probability. I have a feeling some of you shorted this. Congratulations. The 23.6 engaged for hits, that 50% engaged. A lot of micro moves in terms of if your target action includes at these levels, you can assess that if you were to participate at specific levels to the downside and what those hits would mean, right, in terms of a profit equation. The specifics, this was not what I personally wanted to see. However, I know some of you are short on NVIDIA right now. So why don't I just say I'm excited this is happening for you guys. Way to go. What am I noticing here? Let's clean this chart up. Let me take everything off the map here, including any of the background features, including any of the, and I can really simplify this for you guys to take a look at. That looks like the daily is in play. Let's just check out the daily real quickly as we're underneath. You see those red arrows? That on that lower time frame is what we are looking at. Boom, that would be the target on that daily that we're looking at. What am I going to be assessing from a bullish standpoint? Two factors. Anytime you're looking for, let's look at this. Anytime that you're looking, and please start to do this, anytime that you are looking for some expanding volatility to the downside, you guys got this right, okay? Anytime that we're looking for expanding volatility to the downside, look for a compromising pattern specific. We could call this, if you want to call it, a descending triangle framework, descending wedge as well. Nearly flat bottom, but not quite enough for a descending triangle. What's the important fact here is we would start to deal with a descending triangle, a specific pullback, boom. Very tradable, we are highly encouraged to trade those without a doubt, given the probabilities. We don't have a flat bottom, okay? So we've got an angled aspect here. We would look for a recovery to the apex. What I want to say, the 1-2, as you look for the specific ideal patterns to charge into from a trading perspective would be the following, would be some volatility like what we're experiencing here. And I say two things. That would be the first instance of volatility. I would encourage you to look at any specific expanding volatility situations or circumstances and find two of them if you can. If you can identify two levels of expanding volatility, it will give you some perspective in terms of what a bottom line pickup may be. And if you are in, please pay attention. If you are in, and these trade, if you trade with us in Bitcoin, you know these trade. There's not a question maybe, if, maybe, no. These trade the lights out, okay? It's not a question of whether or not you can afford the luxury of not paying attention to these levels of expanding volatility. Hang around Bitcoin, hang around these patterns on Bitcoin. You will see that they trade, my friends, and you know that. We rock the bells. We call these bell pattern formations. A lot of different ways to discuss these, but looking at the two, from now on, when you find a specific level of expanding volatility, make sure that you are prepared for any macro consideration and play at least that next level of volatility, which the market is eyeing, bulls are eyeing as a level of support as we look at the framework. 1, 2, 3, 4. 2 hits on support, 2 hits on resistance. This pattern, if you will continue to watch it, and we'll continue to highlight it, but they trade. You guys know they definitely trade. And I can just pull them out here in terms of the specifics. We can show you, do they trade? Here's the preceding. Now you have an inverse head and shoulders here noted. You won't always, but as we were to look at the specific, hit 1, 2, 3, 4 with a partial return, right? Rock the bell, boom, to the upside. Very nicely done. They're broadening, guys, descending wedges, broadening formations. We would call them, typically we like to put them in the context always, almost always, guys, of a potential bump and run. How does that benefit us on top of the preservation approach? I'm going to say it's a preservation approach to look at the micro expanding volatility here and a larger, say that's the first level of volatility, the second level of volatility, really the third consideration. And this is why I just always like to see this as really a necessary component of your evaluation. When I mention the fact that this could be a specific lead-in, you got it, that the entirety of this could be a lead-in and it could be part of the formation of a specific bump and run. You got it. So that's the third dynamic, that safeguard, which is in play, which will give you not only targets at this level, but down and outside of this to create a bump with a potential run when this level of resistance is beaten. I challenge you to watch these patterns. You do the framework in terms of how frequently this level of resistance is beaten. Guys, look at it. How frequently is it beaten or met? As you look at the opportunities here, it's really a profit equation that it just should be required for every trader. I think you guys will agree with that. So it's a Friday. The good thing is you guys made it to open. Congratulations. What are we seeing on Tesla? It's Friday. You guys do good. You show up. In terms of this specific, the notion here, What are we seeing on Tesla to discuss? Seeing a quick pullback to preceding level of support. So nice feature there. Now, as I were to look at Tesla, what am I looking for is and this is nice that we just went through that 1-2. What are you looking at? Any micro expansion of volatility. Now, this is a ultra micro. Let's pay attention to this, though, in the context of the details here. Let me find the specific broadening formation here. As I were to look at this framework here, yes, now, the more that I operate, any additional, let's say, or any extreme micro positioning that I'm doing, micro patterning that I'm doing, I am acutely aware at all times of the fact that if I'm on the 5-minute and I'm establishing a specific level of resistance, descending, level of support, this increasing volatility, that first of all, there are orders here. Second of all, I am prepared to operate as a value consideration underneath this. And there we see the specifics of a potential lead in with a bump established. I'm targeting as a bull. If I just can't help it, I'm just a bull on Tesla. I'm targeting this level of resistance, okay? But I'm very cautious at all points in time to the extent that I am dealing with an ultra micro pattern. When you get involved in these volatility expressions, you need to find where's the second one, okay? The second one, honestly, if you can really find this, and you can, let's look at, do I have a descending line of resistance? I do, I like that. Okay, I like a descending line of resistance, and I'm gonna go ahead and pull this all the way down. This is the maximum of my zone right now in terms of expanding volatility. You say, well, that's just too far down here, right? At a preceding pivot, right, or in line with the preceding level of support. This all becomes relevant. Just do this in terms of your ability to gauge in your specific level of involvement, right? This is going to be a safeguard in terms of, particularly if you're dealing with anything that's really micro like this. And you know, we see a lot of these participate up and through, back through this zone. Right now, we are in a compromised situation on Tesla. We just are, because of the preceding level of support, okay, and the notion that it would flip to resistance. Just bottom line. You guys know that, but pay attention to the interaction between the patterning dynamics. If you were to have, let's say, 50 of these to trade free and clear versus you were to have, let's say, 75, and 25 of them are going to include a specific barrier like this, boom. You'll probably see, you will see a differential in terms of the performance of the additional 25 that are thrown into the mix that have this level of a barrier into the equation. Now, it doesn't mean that all 25 are going to go against, but it's something to regard as you look at just the maximum of the preceding level of support and the flip to resistance in play. With that said, there are pickups. With that said, our fire and ice has engaged. And let's see where we're at in terms of any additional. Let's look at this. This is a nice, it's a nice move. Not a bad move. I'm noting on the specific 3-minute, just a real clear on Tesla, the specific pickup at the preceding pivot. Just demand zones, all right? A prior pivot, it's frequently, guys, frequently targeted, something we're frequently gonna look at, particularly on Bitcoin. If you trade Bitcoin and you're not paying attention to the preceding pivots to the left, please do so. You will find that there are trades in that zone without a doubt. The specific hourly on Tesla, nice pickup on the 20, nice pickup and nice trade. We can definitely say that. So when we saw the drop, and this is important, when we saw the drop on Tesla from a max target, boom. What did we capitulate out of it? If we were to look at this specific volatility equation here, what did we drop down to? A very well regarded level, that 20 moving average, where orders were waiting. We know that orders are going to be there along that 20 moving average, and particularly after we did hit that top side threshold a few different times and engaged in that top pro line. So looking at the details, we've had a few trade opportunities this morning, including some very good technicals. I like to say that. Let's look at NVDA real quickly and see how she's shaping up in terms of that bottom side level of support. Definitely pushing. How are you guys on NVIDIA? I know the ones of you that are short, congratulations. Some people just excited about being short on NVIDIA. No problem, huh? No problem. Would have liked to have seen a pop here to the upside. Maybe to challenge or provide an opportunity. When I say this, let me note this. I would have liked to have seen the pop up to the upside. for the following reason. Could have given you a very nice entry like we just saw on the 1 hourly on the 20 moving average on Tesla. A pop to the upside could have really given you, if you wanted to be short on Tesla, a nice large high margin position potentially, right, in terms of an entry along that 20. So that really is built into if you're telling me you're short or you want NVIDIA to go down, I'd like to see you just get a rock and roll beautiful entry on a 20 moving average. So it's not that I'm going against you. Just understand the way the dynamics work. I'd like to see you pick up maybe even a bigger position if you are going short. So that's built in. Like if I'm saying, well, I'd really like to see this rocket to the upside, at least to that threshold here, I'd like to see you get a better position if you're excited about NVIDIA going down based on the overall kind of metrics that we're looking at right now. So in terms of the details, what we will say is the following. 4 hour looks like we capitulated to. Remember your fire and ice, your specific kernel calculation, that lower pro line underneath the specific capital line. That capital line's been red. Capital exposure, right? That's RSI, MACD, and stochastic. So that's the gauged measurement in terms of volatility expression to the downside. You're seeing a nice hit on our specific lower pro line. That's for 0.4. That trades, guys, in terms of that 4 hourly. Congrats to all the VIP using our fire and ice. Congrats to all the traders who are involved. Guys, it has to be a cool crowd. I have to tell you that. Anyone who's trading Tesla, who's trading NVIDIA, who's excited about the markets and can literally walk around and say, I day trade Tesla, I day trade NVIDIA. That's a cool group. You know that is a cool group. So I would assume if we turn on the indicators, and again, go to technicals, go to patterns, go to all chart patterns on TradingView. Let's see what we have. It has identified, see, this is where you're going to miss a little bit, okay? In terms of what it's identified versus what we identify, it has identified a bearish pennant here, okay? Instead of identifying the clear coil here with the level of resistance, level of support. So it's missing part of the equation. Just expect that with TradingView. There's not going to be a genie in a bottle. There's just not, right? We do have the specific, remember, we have the specific target to the upside on this. Now, in terms of that, understand any trade can wash out. As I speak to bulls or bears, who's going to be excited about a long, a bull? Who's going to be excited about a short, a bear? It's just the way that you're built, okay, in terms of what you're looking at. It's not my job to guys to encourage like every ball player I know to start switch hitting. You know, I know you can swing with that left-handed at the plate. I know you can. For some people, that's going to be impossible. If you know baseball, it's like, well, some people can switch hit, some people can't. It's not something to walk around and say, you know, everybody's going to be better at baseball when you learn to switch hit. Well, maybe not. So when you hear of a trade opportunity that's long or short, if it connects with you and it's something you can connect with at the plate, including an upside target if and when we can get below the specific descending wedge here, just understand things will connect with you, given your skill set. And you don't have to switch hit to be a pro player, without a doubt, guys. You just don't, in baseball or otherwise. One thing we'd be looking for on this specific breakdown of this pattern formation, let me take all those specific chart patterns off, and a good review of TradingView. If we were to look at this, if we were to look at the notion of which we just got on Tesla, let's distinguish Tesla and NVIDIA. We just got on Tesla, a specific power back up and through really now, and that's nice. You see this. We trade these a lot, you know that, with the understanding that you're having to power again. The bull's going to do what? The bull's going to power through this preceding level of support. How many times? Most of the time, guys. Maybe 9 out of 10 times, maybe 10 out of 10 times. Quick take traders, no problem. As you see this, understand what's in play in terms of that expression. Okay, understand the mitigating factors as well. It's not a free and clear trade in terms of the recoup to this level of support. However, we see this frequently. If you trade in the back enough, you know we see this frequently. The return to, in terms of this expression, again, value, opportunity here, at least for a return to this level of preceding support to act as a potential resistance. And it looks like, the bulls are just going to carry up to this max probability move, which is that level of resistance. It can be a partial return at any time. It can be a rejection at this level. In terms of the confluence noted here, you're just going to find a preference. And you'll find a preference amidst the numbers that you put in on trading these expansions of volatility. One, beware on micro volatility. Just do it. Beware on micro volatility. If you say, well, forget that, I see so many of these work out so well, Well, get overexposed in one of these, just one. Get overexposed in one of these in terms of your position and watch it rifle down completely to a necessary second level of consideration. Just watch it happen. I know it'll happen. Okay? Get overexposed consistently and watch it rifle down like you never dreamed it could in all of your practice rounds that you ran with these expansions of volatility. But I will say this, some of you may just determine this is the only pattern I want to trade, period. And there would be a justified empirical, meaning based on data, okay, rationale by which you might want to do that. Literally, by which you might literally just want to trade these patterns. If you trade enough of them, you will see why. I promise. I promise you'll start to see why. You'll start to see why in terms of that. An additional review of Bulkowski in order. What I'll say is what I wanted to draw was a bit of a distinction between, let me get this back on the screen, between the pullback to the preceding patterning in play here, okay? To the pullback of the patterning on Tesla. Let's roll that into NVIDIA very quickly as we look at the downward pressure on NVIDIA. We have a potential for a pullback to the specific patterning formation here. And again, as we were to look at the specifics, let's just mark and tag out the specific 786 hit. We'll call it 786 again on the wicks. We're going to have some different targets here if we go on the lines. But looking at this formation, 786, maybe 618. If we look and zoom in, we're at about the 618. It should change if we're on, and it will. It was a little bit lower down. If we really get down and guys get more conservative with the specific lines versus the candle wicks are always going to give you a more aggressive read on the situation. Right at that 786 on the lines, and in terms of the potential here, down into about 90% if we're measuring on the lines on the 15-minute on this specific pattern formation. Just be aware you have some more aggressive targets on the wicks if you're going to measure that, and you'll find levels of consistency across asset that will be more consistent. You may find, for instance, on Bitcoin that it just consistently likes the lines on the hourly. For instance, we find that frequently the lines on the hourly, not the wicks, not the lines on the 15-minute, but the lines on the hourly seem highly relevant. And I'm bringing this up to complete this distinction or the analogy to the extent that we would see a pullback to preceding level of support, whether or not it be on this included, and we'll call this included, okay, for the following reason. We'll call it included for the reason that we are within a specific, we'll call this a coil structure, just this specific symmetrical triangulation. Okay, so it is an included pattern, meaning that the descending wedge is included within the specific overall larger macro feature of the triangulation. So this is an included pattern. Why is that important? Because the specific pullback to an included pattern could be compromised by a breakout of that external pattern, meaning we break out of the symmetrical feature here and the pullback to this specific level of preceding support can be compromised thereby, right? Now we saw Tesla just power through that, power through back up into and complete really an included pattern, right? If we were to look at this kind of an included pattern here and power back through a preceding level of support, nicely done. And in terms of I'd say the componentry that I want to draw a distinction or an analogy would be the fact that while we would look for a return to this level of support on the included pattern, right, what we would be seeing is a potential for a frustration anytime that you have a macro pattern in play. Just be aware how it could affect your specific micro patterning. Let's leave it at that. I think that's well stated. Be aware of how your macro patterning can adjust or affect your specific that your macro can override your micro. Okay, probably the best way to put that. And by macro, I mean kind of big ticket items that can kind of shield, okay, that can shield your specific micro considerations. Bottom line, if we do head down from here, and we have some targets to the downside, but we've completed within a 90% on the lines. This level of support is trying to hold. Let's dig back into the framework in terms of what are the actual features that we're looking at. Again, we've got our lower pro line engaging on NVIDIA. That's a real line. On the daily, where are we at? On the daily, we're actually onto lower pro as well. Just looking to see if we've got some additional dynamics in play. Just some tight range trading. This is some tight range trading on NVIDIA. If you're picking up on these, congratulations. If you are picking up on this range, congratulations. If you're trading that, hey, way to go. That's a nice range trader right there. We spoke about that earlier. That's nice. Nothing wrong with that. And what do I immediately see here? I'm going to pick up on this every time. On every time frame, I want you to please try and train yourself on picking up on these. But yes, I'm seeing expanding volatility. Okay, I'm seeing this specific formation here. Now, it's a great example as well. When you trade these expansions, we have a level of, guys, a curl and resistance, support, resistance, support, resistance, support with a mid-level return here. What I'm going to say is be cautious anytime that you have expanding volatility and you have the opportunity here to delineate or to lay out any additional channel formation. Really just almost scripted, perfect for us to discuss this. And I mean that because as we discuss increasing volatility to the downside, always be aware of any specific parallel carry up from a level of support to a level of resistance. That's one of the biggest features as you learn to trade expanding volatility. It's one of the biggest features that you can really, guys, be surprised by and have to really develop into would be this notion of a parallel support to resistance carry up. Just keep an eye on them. And yeah, that is, you want to swing trade, that's a nice zone for swing trading. It's tight. That's the 30-second. In terms of volatility, 1.96% to the downside today on NVIDIA. Risky, it was risky, guys. In terms of that, looking at the, let me undo this framework and look at Tesla holding on pretty well. Let's look at Bitcoin just again, rising wedge, story of the day. Looking at, and you, as a bull, you want to say, I'm going to beat this. We're going to beat this one. We're going to beat this one. When you say that, and you guys know me, you know me and how I trade, I say frequently, I just won't trade a bearish breakout. You hear me say that all the time. And it's times like this, and I just say that. There are traders, and I back off of it sometimes to where if you want to trade it, you want to be a bull, I don't want to rain on the parade, but you hear me say it all the time. I just won't trade a bearish breakout. I mean any type of a bullish pattern which has a rising wedge componentry to it. And I say that why? Because of the probabilities. And if you trade enough, you know, and you pay more attention if you trade a lot in terms of being real bullish on a breakout, you know this. You know this. Anytime that you have a bearish pattern dynamic on breakout, and this is let's say the problem with that approach, and I know this, is that 2 out of 10 times I'm gonna get just absolutely royally exposed as being a bit more of a conservative trader in line with the probabilities. Let's say that I'm gonna get my philosophy of not wanting to trade a bullish pattern with a bearish breakout, meaning I don't like going long, particularly where. And this is the save condition. I don't like going long here. I just don't. Anywhere over the top of a rising wedge, I don't like going long there. I don't mind being long from here. I also don't mind being long from here. Okay, that turns into a time equation. If you're looking at beating the rising wedge, it turns into a time equation in terms of what you're looking at in terms of do you need to move capital or not, right? If you're comfortable waiting through and seeing if, you know, there's a lot of uncertainty from, let's say, from this level below to the dynamics in play up through here. You're holding through that to holding through the specific, the potentiality of the moves. It's just, there's a lot of uncertainty as you get further and further from whichever pattern really got you involved in the trade. So to couch my position, not to back off of it, I don't like to enter into trades, okay, up and over or at resistance on a rising wedge. I just don't. You guys know I say that frequently, and I say some traders just will not enter into this trade. That would be me, okay? That would be me, period. And it's not just me, but it's traders who are aligned with the probabilities. And again, you'll also know this fact that there are plenty of traders who don't care. Now, in terms of pre-positioning, is it required? Maybe should be. Arguably, you guys decide that. But when you're looking at action up and over a rising wedge like on Bitcoin here, just be prepared for this move. Be prepared for it. Trade enough of them, I guarantee you'll find it. I guarantee you'll see this time and time again, and you'll just hear me in the background saying some traders just won't trade those, right? With that said, those traders may be parked lower in terms of, let's just lay out a basic Fibonacci retracement as we look at some Good volatility on Tesla. And we see also Tesla playing a little coy with her targets. If you're going to approach just with the specific retracements, she's a little coy. Down in through the 50%, if we max this up, let's look. Almost to that golden pocket, a little coy. I just say that because she likes to be unpredictable and play a little bit off target. You can see that golden pocket. Did she hit right at it? No, she did not. She hit our specific, in terms of that, she hit into the specific, our specific fire and ice, which is part of the reason we have those kernel calculatives. I'd say they're advanced calculations in the market, but looking at just looking at the entirety, beware of rising wedges if you're a bull. You know this, okay? Ideal shorts, you'll hear me all the time. The market's also very particular about who it allows to short. It's just the truth. If you don't believe me, start shorting right here. Watch things get pushed around a little bit if you're too heavily involved and too overly exposed in your position. Watch the market push you around. It'll take your account out. It'll take your position out, okay? I like tight stop losses. We've been training on that the last several weeks, just reinforcing that to the traders. Tight stop losses. You guys got that right. Looking at the expectation from a support to a resistance line hit here, that's a nice recoup. And this is why, if you trade them enough, you'll start to potentially, I'd say, what would we say? You'll start to appreciate, and this is just a good moment, you'll start to appreciate how all the rest of the noise at times and oftentimes will disappear with an expectation of a return to the level of resistance on these patterns. I don't want to not bring up potentially compromise. And again, I like the equation. If you're going to trade 50 of these, or the example, if you're going to trade 50 of these free and clear with no other pattern dynamics in play, you'll find that you're very comfortable with this recoup to the level of resistance. Less comfortable the more micro that you get. Okay, fact. You will also, let's say if you were to then add in complications, you will definitely agree that you would prefer to trade one, non-micro patterns, like ultra micro patterns. You would prepare yourselves for larger moves, larger indications. You would always do this as a matter of your capital exposure, always looking at the potential for more volatility. It's the save. That's the save feature of playing around with volatility. You need to be prepared for extreme volatility. Bottom line, you're playing with fire a little bit in terms of volatility. It's movement. It's what we do. We look for that volatility. So yes, you're going to be looking away from ultra micro positions, but you see this work out back to that level of resistance on this expanding and descending level of support and level of resistance. Trade enough of them. You'll like these. But you'll be less favorable the more micro they are. You'll also definitely pay attention if and when you have any potential compromising elements in play, be they larger situations as such. And the only thing I'll say about it is pay attention to these patterns. Let them teach you what they're about. I cannot recreate in 5 minutes or 50 minutes or 5 hours the specifics required on, and guys, what you'll gain through experience in trading 500 of these. I say that so much. For the ones who do, you know what it's all about. It is a profit equation, very, very, very distinct to this specific pattern. It just is. You can research that over the last 40 years. I'm the type of guy that likes to get the right answers. And in terms of that, in the market or otherwise, if I find a right answer and something that stands out, I'm definitely going to focus on it. And those who have focused on that pattern will agree. Flat top on just the micro 30 second. Let's switch to the 1 minute, kind of take a look at what is going on. Remember, in a bit of a real tight channel here to the downside on NVDA, let's take a look at, and we're still trying to hold the specific level of support engaging down through that 90% completion to the downside. This is the bulls to hold. That's the bottom line. They're pushing around uncomfortable in terms of when you see this, be prepared for your specific, and let's talk about a solution here. This is very important. Good morning. It's Friday. Hope you're all doing well. This is London. As we were to talk about the specifics, you're going to have a threshold tolerance here, and there's going to be a group that's not going to like this answer in terms of, well, we just broke through this level of support. Who's not going to like this answer in terms of, or this situation? And, well, I thought we had broken this level of support. Who doesn't like the fact that we just pushed along here? Who doesn't like it? Okay, I'll tell you who does not like this fact that we broke support, but we didn't really break it yet, is someone who decides to short right here. Absolutely. Someone who's deciding to short right here. Okay, hates the fact that they just had their position taken from them or they're uncomfortable in this zone. What is the better, guys, the better place? And we didn't have much room on open, etc. But looking at this, we had, for instance, RSI, MACD, and stochastic red the whole time. Okay, this is just on the 15-minute. If we were to look at the 5-minute, okay, on the 5-minute here, look at the bears in control, a red condition on RSI, MACD, and stochastic. So the notion is the following. If you want to short it, great. Can you grab your short higher? Can you relax at this zone? You can. Instead of trying to power into a short lower, grab your short higher. Grab your short higher. I know everyone wanted it to go up. I know plenty of traders, specifically by name, that want this to go down, who are hunting for their short right now. So to the extent that you are in either camp, I'm going to say this. Grab your shorts higher. This will be a more comfortable zone for you, period. And in terms of the pickup, you're going to expect that. If you trade quite a bit, what I'd ask you to do is look at your confluence in terms of, and I'll just tell you on your 4-hourly fire and ice long, you love this zone. You just got a phone call literally on the specific pro lower line. You just did. And I know we're below the specific 20 moving average, below the cap line. Cap line's been very important recently. But that's what I would just say is grab your shorts higher. Don't be frustrated by these moves. And definitely the market is in a position right now where it wants to take your time, right? We're about an hour and 10 into the trading session and excited to go through some of the details in terms of the overall dynamics. Wouldn't count out the bear flag potential here on NVIDIA, but what I'll say is that I really like to see and this is the primary consideration for me, I'd really like to see us get down to and express more of this volatility expansion on NVIDIA. Would love to see some hits down into this level on this pattern framework. You just saw it work out very well on Tesla in spite of those dynamics, those macro considerations, and that rising wedge. Nice save on the specifics there for Tesla. On a day, as you guys heard, the top 3 automakers have the union striking. Very interesting. Top 3 U.S. automakers. One thing we are probably working into here would be a measured move. One of my favorite moves in the market, and it's stacked up. The angle of it is perfect in terms of the specific channel formation. The angle is perfect to have. It really is, isn't it? It's a nice angle to have a bear flag. But we don't like this mess here. We like a nice, strong move to the downside. Ideally, we like a nice, strong move to the downside, right? Do we have it here? It's just, it's defective at best in terms of a real flag pull. If we were to just grab this portion here and say, okay, that's our flagpole. Let's measure the amplitude there, and let's try and stack this into here. Okay, we can. I just don't like this. I don't like a flagpole that looks like this. It's just not on. It's not on my agenda per se in terms of preferences. Measured move, no problem. In terms of a nice channel formation, measured move will get us down to about that 444. I know that you are all plugged into your own trading game to an extent, and probably just hanging out, spending some time in terms of the market open or otherwise. Hopefully the technicals are something that are intriguing to you if you're not already fully hammered into them. Just take it a step at a time. Don't allow anything to be overbearing. That would be a definite just, I'd say just an encouragement, level of encouragement. Don't let anything be overbearing. You need to enjoy the market. You need to enjoy your profits from the market. That's the idea. And I think the more that you enjoy the market, the more that you'll enjoy profits from the market. That's the way that we look at things. So in terms of, again, the fan consideration, now Tesla is doing this. And in terms of those preceding levels of support we identified earlier on, just let this register with you in terms of the potential for the fan procedure to play out, which we discussed early on in Tesla. Yes, do note that. And it's one thing for me to say it, it's another thing for you to see it and us to recollect on it now and for you to internalize it. As we were to see the fan dynamics in play marching the way up, you do see the preceding fan that specific fan level of resistance now powered into support, and the dynamics still at work. For those who parked orders at the lower level of that fan, congratulations. And yes, we had other levels here. We certainly did. We had marched up through this specific level, and we essentially the buyers failed to hold. A little bit of pressure on, to say the least, on the NASDAQ this morning. We just got some interesting overall news. I think that auto strike is really something that's affecting people. Also, it's Friday. A lot of people may be taking profits on Tesla and otherwise, and looking for some down targets on NVIDIA. Just pay attention to where your orders are stacked. Pay attention to your levels of exposure. Pay attention to your volatility plays, what's trading well, what's not trading well for you. All right, in terms of the patterns, if you find a pattern that you've traded 15 or 50 times and you cannot get it, you cannot get the sync of it down, the synchronicity of it down, let it go for a bit. Focus on some other patterns that you're more inclined to trade. Looking at the specifics here, in terms of a return to the specific preceding level of support, let's just measure this on NVIDIA one more time. Let's measure this on NVIDIA one more time as we were to look down through this, okay? The expectation of a return to any type of a line such as this, which we could call a neckline. What we're going to be looking at, first of all, is a potential return to this apex, you got it, on the specific descending wedge, right? Second of all, we're going to take note of any remarkable levels of volume, without a doubt. We want to know, have we really set a mark where we would not anticipate a return to a preceding level of support based upon a volume move. We do have some noted volume. It's not insignificant. Here, if you were to look at the volume, it is not a runaway volume moment. It's not something that really registers on. Let's say if we were to look at this over through the past month, it's not a standout in the past month. It's probably within that mid 50% level at least, though. So it is a relatively significant level of volume that has engaged. Okay, so I'm noting that. In terms of volume, the assessment needs to be made in terms of the return expectation in the market to that level of preceding level of support. If we're down on low volume, real low volume, through this specific preceding level of support, per the TA authorities, we're looking at an increased likelihood of that return to the preceding level of support, okay? So that pullback in that zone. Just very important, note such. It's not the sole dispositive factor, but it is the primary consideration. Read through TA, the authorities, and you let me know what your thought is on that. Looking at the additional levels of pickup that are trying to engage right now, you'll see this definitely on NVIDIA. This level of support in around this 15-minute, and just challenge yourself as you walk through. Some of you are just trading on fire and ice. It makes this a lot easier in terms of the pickup levels, in terms of if you're just doing a straight over/under on the 20 moving average of Bollinger Bands for target purposes, it simplifies things, can simplify things quite a bit. If you're trading this specific pattern here, now this would be the worst thing, is someone to engage. This is why the shorts early, shorts from above. Engage your shorts from above. In terms of the specifics here, for the guy who went short here, decided that he was going the wrong direction and got out here, that's the most miserable way to trade on the planet, is getting in lower on shorts, releasing on a bit of a trajectory whipsaw, then having to get what? He or she's probably getting back into her or his short here. Don't play that game. Engage in your shorts higher. If you want to go short higher, without a doubt. So we have been through the dynamics. We can go ahead and mark this out. Felt confident that this would engage in terms of the pattern to some degree. Let's take a look at the specifics on the specific, and how am I going to lay this out? Let's delve into this right here. I would expect some specific 23/6 engagement with what? The specific complication of a preceding, and this is going to be the question here, the preceding level of support on NVIDIA. Without a doubt, that's going to be the level which will try and be reinforced actively right now. Bulls are trying to engage this level, preceding level of support, and we really have two. line markers at that just about, guys, within threshold, almost 3-4 here. This has been a well-respected level of support along the preceding number of days. So it's going to be a big level. And really, as you look at this, it's going to be, we would prefer, just in terms of the probability here, just in terms of what we could see in terms of a pattern, like ideally, if I'm looking at something to trade right now, and you guys are as well, just understand I may have a preference. It doesn't mean I'm forgetting the initial trade, but I want to provide some commentary that is relevant that you can look for next time as you decide to trade. If we were to look at the specifics in terms of what would be really nice here, if you really want to go bearish, would be a nice big right shoulder. Would be beautiful. I mean, if we're going to go bearish and we're going to head down, give us something to talk about, right? Give us something that's really, really nice. Coils are okay. You know, the market tends to respect a real nice right shoulder here would be really nice. And it wouldn't be out of the realm of expectation given, okay, the specific preceding levels of support in this zone. 1, 2, 3, 4, 5 hits really in this zone on your 15-minute. Now, for some traders, they wanted that hit right there. Boom, boom. They just wanted that hit and it's over. For other traders, they entered maybe with a flash trade and they decided that they want to, with stop losses noted, right? With stop losses noted. What I'll say is they flash traded and they may have a carry trade to see if we can complete out one of those, the right shoulder that we just indicated. So we do have a breakdown. Okay, there's an expectation of 23.6 levels of involvement. Who's getting hurt now? The guys who are getting hurt are the guys who got in short, released their short, got back in short, as now we're really going down into what? And now they're thinking about releasing their short again. This can be a whipsaw just dynamic here. So recognize your hurdles when you're heading down. And what's the name of the game here? We understand bulls are going to try and reinforce preceding levels of support, preceding pivots to the left, right? Absolutely. We understand if you're going to short, try and short from higher. Let this be a cool, easy journey here in terms of allowing it to push. It can be very uncomfortable if you're entering from this zone. You can see that in terms of the levels in play. Let's take a look at the specific. Let's take a look at the 1 minute. All right. Let's take a look at that 1 minute. That channel has gotten up and out and just capitulated back to that channel. But these are really, really tight moves. All right. And you're seeing the dynamics in play that we have on our specific patterning. These are tight moves, guys. We're playing really on the pro and green bylines on the 1 minute time frame. These are tight with the respect of the RSI stochastic MACD line. You see these levels trading. You see hits into the specific, and let's just look at this on that RSI stochastic MACD line. That really was a hit of 0.24. If we were to look at this, like a 0.2% move, you see that capital line. The stochastic RSI and MACD, yes, being reinforced, the bears technically have control of that, but that's a tight range. You see how tight this is on the 1 minute time frame. Those are trades. Those are trades down through a byline. Boom, boom. Okay, that's a trade. You got to know how to handle the position. If you're looking at how tight can you get? It's going to depend upon your specific exchange, on your ability to execute into something. Just very, very, very tight range on this 1 minute. The moves will look huge. You know that. The moves look enormous. They're just so tight. So we're in a really tightly bound range, but this might be a level that you look at in terms of staying into a specific trade. In terms of negotiating an entry or exit, just look at the level of respect that the specific 20 moving average has had along with that Bollinger Band along the way on the specific 1 minute. I always say this to our traders, and just pay attention. I'm about to let you guys go and we'll move on to some other things on Friday, getting ready for a weekend. The left side of this moving average, the left side of this moving average is the falling knife, okay? When you're looking at a breakout or anything else, as you're looking at the left side, particularly on a micro basis, the left side of this moving average is the falling knife. Okay, if you're on the 1 minute and you're on the left side of the 20 moving average, generally that is the falling knife that you need to be careful of. So bears being rewarded. Let's see if that 23.6 can and will pick up, and we'll probably Let's see what we're going to check in on Tesla real quickly. Just want to spend a little bit of extra time in terms of the markets today. It's Friday. We get to spend some time. That's a good thing. You're seeing well, what did we have on Tesla? Hit back to that level of resistance. Nice hit. Nice hit. Trade these enough and you will see. That's the expectation. We want to get back to that level of resistance. Then we see a nice move to the downside. It is. Nice hit into resistance. In terms of the additional features, great volatility on the day. Take a look at the screen in terms of the just some nice profit taking on Friday. 1.1% down Tesla. NVDA 2.68%. Right, the Nasdaq down about 1.48%. AMD down 4.27%. That's a big driver right there. Taiwan Semiconductor down 1.92%. There we go. Let me move those over. Pardon. In terms of that, just nice to see some action in the market. Without a doubt, give us the volatility. We'll trade it. Let's rewind a little bit and take another look at NVIDIA. See if we can hit into that 23.6. Let's see if we can hit into that 23.6. That's going to be the level, the initial level in play. And we do have, let's take a look at this. We're going to have a bit of a differential here. Let's go ahead and mark this differential because we have a level of resistance, support, the support reinforce and resistance. There's going to be a differential in terms of your dynamics here. If you're looking to pick up below, please note this, okay? And I note this not to add confusion, but to note when we don't have confusion, right? If we're going to note when we do not have any confusion, it's a real straightforward, just powerful technical instance where there's just confirmation on every angle that we can look at. If we were to look at this, let me turn this blue. If we were to look at this specific grab feature here, okay, and it's going to have some more aggressive targets to the downside. This one will have more aggressive targets to the downside. Please note that. You'll have more aggressive targets to the downside on the specific blue symmetrical triangulation than you will on the red triangulation because the amplitude is larger on the specific blue triangulation. Now, you may choose to trade aggressively or you may choose to trade more conservatively. Right? That's just going to be up for you to decide. If you say, well, I'm going to aggressively trade this, I want to hammer in quicker. Potentially, if you're more conservative, you may, and by conservative I mean you may be trading this specific feature. Okay, and if I were to show you the lower 23.6 on this blue triangulation here, you're going to have traders likely engaged at each of these pattern dynamics. But if I want to become a little more conservative, if I'm looking for a pickup amidst the specific downward targets, let's say on that daily, right, on the daily target to the downside under the 20 moving average, on the specific daily, looking at a potential and something we've identified for a few days now, trying to get down to that lower standard deviation. Right? As I'm looking at that, if I'm a bull and I'm trying to find good pickups and I just can't help myself, I've got to get in there and flash trade or otherwise, right? If I'm looking for pickups in this zone with a clear target to the downside, which we've been looking at for the last number of days, congratulations to everyone who's getting paid on those shorts. Congratulations, nice short. In terms of the details, let me rewind into the reason to become a bit more conservative potentially is that we have that downside target, right? And we will line up the specifics here. Let's look at where we would be on this target hit. Going to be at about the golden pocket. If you'll see here on this specific framework here on the daily, that downside band is going to be right at about that golden pocket here. Okay, so that is an important exercise to go through. Let me get the other, if it will allow me to get the other specific targets in play. And this is part of the analysis that you would want to go through. If we were to look at the specific target framework on the more aggressive targets, let's look at the more aggressive targets based on that the red triangulation, the first triangulation, and we're looking at about a 90%. It looks actually about like a 78.6% completion there. So levels of interest down through the 786 or the 86, that 90% essentially on each of the specific patterns in play. Okay, that's kind of a hot zone if you were looking at the specific full completion they're at, really based upon the underlying target on the daily. You got it, that underlying target on the daily. Let's clear this up on the daily and take a look at what we're looking at. Let's see what we got. So NVIDIA, interesting story, huh? Interesting story. I know a lot of traders that are looking for some nice pickups on NVIDIA. This would be a great spot to push even below the specific target to the downside. This would be a sweet spot, and we'll know that we have to look at this cross time frame, but looking at that level of support. And I'm excited for what reason. We called this specific like dead on ringer, bam, this specific low here. And that was not a popularly, let's just say a really easily discernible pickup here. But I'll say what? I will say that we clearly called it, clearly nailed it. That was a big move. That was a nice pickup. Let's just revisit that in terms of the overall trajectory to the upside. That was before the earnings report. That was for 25%. 25%, that was a big pickup. I'll remind you, as you look at the specifics, as you look at your macro channels in play on a lot of these specific, let's say just market driving assets, whatever they may be, pay attention that you'll want to be involved, okay, along these levels of support. You will want to be involved along these levels of support. I'll probably want to draw this on the 4 hourly. Okay, I'll probably want to draw this on the 4 hourly. That was a nice time frame to work with precedingly. But as we're looking at this, and I'll just switch to the 4 hourly right now to get a bit better of a feel in terms of where we're at. If we're going to push this channel just a bit, 4 hourly is going to allow me to raise this level of resistance across the top just a bit. It's going to allow me to push a little lower on this level of support here. How do I know that? Because there's just more volatility. Okay, there's going to be a bit more volatility expressed on the specific level of resistance to support on the 4 hourly than the daily. So I want to expand this just a little bit so that 4 hourly, not just something that I'm doing, but something that the traders right now overall are doing. With that said, we are coming into a level of support contact here. And what would be the next big ticket item would be some sort of an analysis here in terms of where we are relative to this bottom side pickup, and will we be thrown outside of this support channel on NVIDIA? Will we be thrown below the primary trend channel on NVIDIA? That's a very important consideration as you watch this downward price action. Don't just look at the immediate, don't just look at that immediate next pattern play. Consider the overall trend channel here for NVIDIA and how it's being stressed currently. How do the dynamics within let's say within that channel formation, how do they confirm or contradict one another? Very important. As we would look at this specific level of support pickup, the next framework, let's say just the next logical assessment here on NVIDIA, worth spending some time on, given the fact that depending upon your drawing, we are at that level of support now. The lower consideration is going to be in this zone and this level of support. And I want to mark this here just in terms of the consideration for where would that put us relative to a downside target on the daily. Okay, the downside target on the daily, we're going to meet and beat that target to the downside, that lower band. And with the expression on the let's say on the 4 hour, let's get back over to 4 hourly and make sure, I'm trying to catch myself because this is going to be, luckily we have the same level of support on the 4 hourly as the daily in terms of this lower line pickup. So we've got some dynamics in play that are a little bit difficult for NVIDIA. The dynamic that is difficult for NVIDIA is the expression here with this lower level of support being down and out of this primary channel, the primary trend channel, okay? That's an aspect that is not attractive, okay? That's just not attractive from a bullish standpoint. It's not an attractive aspect of the price action right now. It is a compromising feature of the price chart right now for the bulls. As a matter of fact, this level of support is a compromising feature for the bulls, okay? Because there is a lot of attention below this level of support. You understand that without a doubt. So we're on watch and on guard for NVIDIA, okay? That's a real situation. I want to flip over to the specific NASDAQ right now. NASDAQ, Precedingly, let's take a look at some of the features here in terms of a potential, and what do we have on the NASDAQ? When we go big picture, a lot of the times it's not that we are completely just checking out of the equation here, but look at this. As we were to look at the expanding volatility on the NASDAQ, we say that's bullish. That's something we want to be a part of, right? Absolutely, but there's a big difference between this support hit here and picking up in this zone here, without a doubt. But you just look at it, it's like, hey, it's looking bullish. Says the guy who wants to pick up here. I'm telling you, the name of the game, lower pickups on longs, higher pickups on shorts. Now, this looks great. This is very bullish. We would say that 9 times out of 10. Where do we want to pick this up? Really like to pick it up in here. You guys got that. If you trade this enough, if you trade enough, you know the answers to these issues. Now, this would be the penultimate concern here on the NASDAQ. And we discussed this and the possibility it would provide a real trade opportunity, the tech sector, in terms of that index tied to the tech sector. Looking at the level of support, boom, boom. Yes. What is this screaming to the traders? Particularly if we were to fall out of this zone. It's going to be an important couple of days. Isn't it an important couple of days here on the NASDAQ? Let's call that through next week's Fed meeting minutes. Could be a very important week next week as we determine what? As we determine if we're going to have a trade opportunity surrounding on our individual assets and or on the NASDAQ. And if we get some correlation on Bitcoin, let's check in on Bitcoin. Nice rising wedge feature. To say it's nice. Traded in line with expectations, okay? In terms of that move, in terms of the rising wedge, expected price action to the downside. Remember that no-go zone up and over, in terms of long entries up and over. The specific level of resistance across the top. Just be aware of this no-go zone for longs. Carried in from below, no problem. Okay, relaxed, calm, cool, collected. Let's see what happens with a long from below. But recognizing the overall index challenge right now that would apply to tech sector, which Bitcoin's not a part of, but we do look for correlation purposes. We don't look at the S&P for Bitcoin. We just don't, guys. We look at the tech sector being NASDAQ. In terms of the specifics here, we're going to need to see a little bit of a play out. Again, bulls are where? Where are the bulls? You can't get them off this line. I'm telling you guys, it's not a question of if, it's an absolute. The bulls, you can't get them off what line? This line, right here. Ba-boom. Parallel, guys, carry level of resistance carried down to a level of support. They going to engage? I mean, is the sky blue? Yes, the bulls are on this line, period. Boom. Right in line with our 4-hourly lower pro line on fire and ice. Now, I'm bringing this up because the bulls are going to try and hold this. It's not a question of maybe. It's not a question of, if you're a bull, you're trying to hold this line. All right? Let's formulate a nice little bull flag and move, bam, to the upside. Right? Now, with that said, where are the bears pushing? Without a doubt, the bears, anyone in a short right now is pushing. They heard me say descending triangle a few days ago, and they're in a short, the bears are, and they're loving it. And they are just praying there are enough bears to push through this level, all right, and get back down to this level of support, and let's rock and roll, they're saying, the specific descending triangulation. So, without knowing the internal componentries of Citadel, without knowing the internal componentries of BlackRock, JP Morgan, Goldman Sachs, etc., what order books are flowing around, and you can say that you know that based upon an order flow calculation or something else, you're not going to know who's pushing buttons at Citadel, why, how, and what. They're not giving that information, guys, to the public. They're just not. So in terms of what's going to hold, what big moves are going to be made behind the scenes, right? What huge on the book or off the book acquisitions are in play. Bitcoin's got a lot of, what are we looking at? A bankruptcy issue right now. And we get a spike in price. You're not going to find the genie in the bottle. What you'll find are trade opportunities, right? Without a doubt, you'll find trade opportunities. This is one on the NASDAQ. Pay attention. So this is highly relevant. Let me get back over to NVIDIA. Highly relevant to the issue of NVIDIA currently. Let's draw a specific trend line channel on the NASDAQ, and this is worth spending some time on. These are big issues, right? As you look at the push right now on NVIDIA, and you look at the push right now on the NASDAQ, you see NVIDIA along a level of support. You see the NASDAQ. This is 4-hourly. These are macro bull trend channels. you see the NASDAQ on the level of support. And again, are the bulls trying to hold this line? You betcha. Not as much complication on this specific NASDAQ. A little bit more room here to work with. We could look at the specific daily being reinforced on the NASDAQ. Boom. 20 moving average currently in play on the daily. It's a big line. That's a big level to be reinforced. Noted on the NASDAQ compared to, if we were to look at the specific line on NVIDIA. This is an important moment for the market, absolutely, technically speaking, and NVIDIA is technically compromised with the following understanding, that a level of support would, okay, there is an active level of support, and by active, it's in the market. There's a level of support that is, okay, and J-Mac, shout out, what's up, brother? Hope you're doing well, J-Mac. As we look at this, there's an active lower level of support on NVIDIA that is meaningful to the extent that it would require a break through the current bullish trend channel, at least on the 4-hourly. You can hop and shop your specific trend channel, but that is the channel. That just, guys, is the most relevant framework. Find your own. If you want to redraw it. We're pretty good at this. We're not perfect, and no one is, but we're pretty good. We caught this specific hit here precedingly for like 25% on NVIDIA. I'll just say that this lower line here is a dynamic which would require a push past it comfortably and just recognized support level. So the traders who know what's going on and just caught this specific level here are already pushing this a little bit further beyond on the 4-hourly or on the daily. Understand that. The specific support line channel framework has already pushed. If you trade a lot, you know what I'm talking about. We caught this specifically exactly. This level is a push, and we're arguably heading a little bit lower. I'll just say it's stacked with orders. We are stacked with orders down and below to this specific level of support. So there's, I'd like to say, most people will say that there's a little, we expect some volatility. That's the most famous thing for someone who doesn't know if it's going up or down and is going to tell you that you could lose money in the markets. That's the famous tagline. Well, we would expect some volatility over the next few weeks in the markets. You know, the guy doesn't know whether or not it's going up or down. He thinks it's going down and he doesn't want you to lose money, right? Be prepared to lose some money. I would just say that this is some potential chaos, right? We'd like to take advantage of chaos, however it is demonstrated in the market. So when I see something like this, I see an opportunity for chaos, or some chaos to be thrown into the markets a little bit. Hopefully not technically to the point where we would divorce ourselves from the ability to operate in the markets at higher levels of probabilities. That's the bottom line. As we look at opportunities to participate in the markets, it's going to be in line with the preceding 40 years of, you got it, guys. This is not a hop, skip, and a guess away. Expect some quote unquote volatility. No, the last 40 years of market action. I want my trades, our trades, to be in line with the maximum probabilities. Understand when you're in a level of chaos that there still are probabilities at work, as we see the specific, and this was on the original draw in on the red. The original targets are picking up at that 23.6, okay? So as we were to talk about how to participate in the market, the best ways to participate in the market, I'll just say this: stay in line with your maximum probabilities. We saw that today, beautifully well done. And these levels, if you guys have this drawn out, we had drawn out, first of all, the specific red feature, resistance, support, resistance, really reinforcement of support here. So this specific triangulation is in play with downside targets. We know that. And congratulations on NVIDIA. I know traders who are short NVIDIA, so congratulations. Shout out to AJ Crypto on the top right now. What's up, AJ Crypto? Hope you're doing well. My brother, longest standing VIP member. I want to shout out to Venus, and there's Luke actually. Luke, what's up? Luke, big dog from Canada. Canada. What's up, Luke? Hope you've had a nice summer with the family, etc. Shout out to J-Mac, California, in the house. What's up, J-Mac? You're on the top there now. and just all the VIP. It's very meaningful to be building on through to you. What's up, Chris, down in Land Down Under? We got Tony in the house from the Land Down Under as well. There he is. Boom. What's up, Tony? Nice to see you. Nice to see you this morning for Market Open. I know you're all working on your trade game. And big and special shout out to Venus. I just want to say, Venus, congratulations on all of VIP trading success in 2023 and beyond. Pleasure to be building with you. And it doesn't come without its challenges, without a doubt. I joked around a couple of days ago, and it's like, well, you understand that, and I said this to you all, it's like you could understand how it could seem like we're speaking a different language. The point is, amongst everything, or amidst everything, rather, all of the technicals that are discussed, what we're trying to filter down into, and it's not as complicated, but it requires commentary and a lot of experience, a lot of the verbiage that I will bring to you. It's not to replace what 100 or 1,000 or 5,000 or 10,000 or 20,000 trades will do, but it's to give you some accompanying commentary to reinforce what you're experiencing in the market. All right, it's not to replace the experience you need in the market as you go through your 100 rounds or your 1,000 rounds. And there's Venus, shout out. Great picture, by the way. Love the picture. Great to see you this morning at all. And the picture or otherwise. What I will say is the issue is you can't explain experience. You can't coach someone or talk to someone about, well, your experience and is going to be, let me say this, the market's going to require you to participate in the market to gain that experience. When I talk about and add commentary to these issues, really part of the advantage I'm going to just say is that you're going to be accustomed to a different pace of analytic. Even if you're more accustomed to, man, this seems confusing, everything is pointing in a different direction. What does that mean? You don't have confirmation, right? And so you'll learn potentially, instead of being frustrated, to just recognize, no, that's easy. I don't have confirmation. This is not the trade for me. Nice, plain and simple. When we're wound up and we're pointed in different directions, potential flash trades, potential resistance, flip to support, this probability against that probability, it's okay to take a step back. First of all, realize the pace at which people operate. Not just me. Get into some high frequency, pro level, top shop traders, guys, the ones that are number one in, and we're watching NVDA pick up on the 23.6 here, okay? If you watch them literally execute into the market, trades lasting 5 to 10 seconds, bam, bam, there's a different level of intensity. You don't have to operate at that level, okay? You don't have to get involved in technicals or assessments to filter through this much information, technically speaking, okay? You can literally say, well, that's more of a complicated trade. I'm going to back out or back down until I really see a nice, and we'll call it a trade op, right? A trade opportunity, until I really see a clear cut 100% what I want in the market. There's nothing wrong with that. You all know that. There's nothing wrong with that. But as you learn to accelerate your activity and accelerate the process of filtering that we go through, right? The process of analysis is technical analysis. It's analytical by nature. It doesn't mean that it has to be as complicated as, guys, when I'm talking the Fibonacci extension to the maximum probability fractional completion based upon increasing volatility to the downside with a partial return, okay, which is mitigated by your stochastic RSI and MACD and a something in the bull's favor, which is a limited expression of seller volatility. Now look, if you just understood everything that I said there, and I know that you did, what does that mean? You know what I just said, right? It was relevant essentially to what we're looking at right now. All of those dynamics are just on the screen. You have to understand you are in a very, very, very good, guys, you're in good shape. If you understood, and I know that you just did, a little bit complicated, but I know you just understood what I just said. All right? And you could absolutely apply it. Do you realize the level, the caliber that you're able to operate at when and I could repeat it right now. You'd understand it again. Maybe mark the time on the stream, because it was a little bit of a quick challenge to you and me in terms of expressing what was on the screen. maintaining the relevance technically, but to show you how complicated something can literally reel off, immediately, but the level at which you're able to operate in the market right now. The level at which it could be much more accommodatingly easy, much more simply put forth. We could relax, but you're capable of operating at that level. Because you're capable at receiving and analyzing information at that level, that puts you at a very, 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 guys, you're at a very, very good spot. You're very capable, all right? This is not it's noteworthy. It's very noteworthy. Don't take that for granted on yourself. If you're working on internalizing what I just said, mark the time. Go back and listen to it. And you may have some critiques on it, and it's fine. I was being a little bit exploratorily complicated and maintaining relevance, okay? In terms of how much can I produce, and we're seeing the 23.6 pickup on NVIDIA, okay? As in terms of the extension. But as I'm doing that, I'm proving to you guys what you're capable of. And in terms of, this would be the one thing, if you're finding that you're assimilating the information and the ability to analyze and digest the information quickly and you understand it, but you're not quite at the point where you're agile enough in the market in terms of your execution, just wait. Just wait. When it all comes together, that's a sweet thing. That is awesome. You just don't find a lot of people who can assimilate information that quickly and bam, deliver it into the market. So I would just say hats off to all of you in the VIP. Hope you're doing really well, and that's a good moment for us to share on a Friday when everybody's gearing down. You got it right. Way to wake up and way to hit it today. That 23.6, nice to see it engage. And we can walk all these pickups through fire and ice. You know that. Let's take a look at this on, and again, NVIDIA at a tough level. At a tough level. Nice. And what am I looking for? A little bit of chaos would be all right. A little bit of chaos in the market would be just fine. We wouldn't mind it, right? Didn't get the pop we wanted this morning on NVIDIA. It was risky. I said if you wanted to go sit down and play a hand of blackjack, literally at a poker table, go ahead and go long on NVIDIA, right? It'd be about the equivalent. We did get that poured down in through, and from that level of resistance, you can count it a 1, 2, 3, 4, 5, okay? In terms of the patterning in play. What did we have? We had the 4 hourly, didn't we? We had the 4 hourly on that picked up a bit here for a few flash trades on that specific level on the 4 hourly. Then we had to do what? Then we had to move into our specific Fibonacci extensions. And that was nice to see. We got to move into the Fibonacci extension targets, bam. So that's a necessary part of the trade game as well. Let's dig into, and if you guys have some fun stuff going on this weekend, we would love to see some pictures, etc. in the back. We are on Slack. You know that. We are on Slack. Looking at an interesting level of pickup here, the specific weekly lower pro line, just note that on NVIDIA. Very interesting. Nice entries. I mean, nice hits into the cap line on the weekly. That is a dead on ringer here, kiddos. That on the weekly is a dead on ringer. Levels of interaction on the weekly, 1, 2, and a dead on ringer hit. And they say, well, I just want bigger trades. I have to go to altcoins because I want bigger trades. If you took 3 swings at the plate on RSI stochastic MACD, on NVIDIA, trying to catch the top along a red cap line on the weekly, the opportunity to pick up an exact hit here, hello, this is a nice trade. 9.5%, that's a nice move. Wash out of 2 trades, boom, boom. Get the tight stop loss engaged. Let that roll. That's nice. We note such. Anytime we see a direct level of interaction, you say, well, I don't want a 1 out of 3 hit. How tight is your stop loss here? If you're really trying to hit into these, what a great trade opportunity. You see that? Anytime I see a level of precision like this, I get excited. And it's because you're able to digest very quickly and assimilate and analyze very quickly the information that I'm presenting to you. That means that you're capable of hitting these moves. Boom. High precision, right? You're high level operators in terms of your ability to function in the market. And it's just nice to see that you appreciate that's a sweet pickup. Okay? Note such. Kindly note such. Looking at the details, are we down and through and we are, huh? Measured up, and where did we come into near contact with the, you guys got it right, the cap line. Just close enough, huh? Maybe you say not close enough. We're reviewing it on the weekly. It's incoming, right? And you know, when we have RSI stochastic MACD on that 15-minute engaged, it's a hurdle. Bears are there, without a doubt. So we're seeing that 23.6 pickup. We're seeing that 0.4% move. And then we're seeing, right, within threshold, close. The weekly did very nicely. Looking at this specific level hit here, had to play a little bit aggressively. Looks like the bears are comfortably in charge of NVIDIA today. Nice to see the dynamics, though, in terms of the pickup along that 23.6 and the respect for our cap line. Capital control. You got it, guys. Boom. Very, very, very nicely demonstrated with a little bit of need to trade, right? Because you can get exactly on this line and say, well, it's not an exact hit. It's just not exactly. I mean, we're off by 0.02%. We can make an issue of it, right? Are you even, we have to get into the decimals a little bit more on this, but it's 0.02%. Very, very tight. Re-hitting at that 23.6. Now, in terms of what we'd look at, that 438 is interesting. And shout out to anybody who may have just said, okay, I heard it mentioned, the 278. Someone could have done this. I'm not sure if you did. You tell me if you did, but I mentioned yesterday the 278, right? Keep an eye on the 278 as a target for Tesla. What'd you hit? 278. Boom. Nice hit. Really up there 279 for a brief second there. So nice maximum completion, okay, in terms of that maximum probability of the completion. That's what we're looking for. So let's dig in the back. I want to see some charts from you guys. I know you guys don't have time for charts, right? I always said I wanted to start the VIP because instead of a nice bottle of champagne that you would get at your VIP suite in a club or something like that, that I would just like to deliver you a nice set of charts, maybe some nice trades here and there. So that was kind of one of the reasons I wanted to start VIP. It's like, well, instead of like champagne or cocktails or something nice at a VIP club, I'm going to give them some nice charts to work with. There we go. Instead of that bottle of champagne, go light on that champagne. Don't celebrate too early. The market has more to prove to you if you have more to prove to it. That would be my suggestion. In terms of the pickup, preceding level of support, pivot to the left on Tesla, 3-minute noted with a bit of an odd coil here. And pushing into what? What's the odd dynamic that it wants to create right now in terms of Tesla? What do you see here that's a little bit odd? Well, we see a little bit of the coil. Let's just mark out the coil that we see. Okay, in terms of this coil formation, boom. All right, in terms of the coil formation, we see this, but we see an odd dynamic in play as well. We see the odd dynamic that we're really going to have to stretch things out to get into the identification of the specific expanding volatility equation that is our favorite. Now, why don't we want to stretch this out? First of all, is it bullish? Yes. Bulls have picked up from support, resistance, resistance. We need 2 hits, support, resistance, support, second hit, resistance, second hit. So yes, it's technically bullish with the opportunity to capture further below on this level of support. These are maximum probabilities. If you want to deal with higher probabilities in trading, this is the go-to specific pattern. And it's very instrumental in terms of capital management because you're prepared for operation lower. Okay? Now, looking at this, we would be mitigated below by the steep level of descent that is being established. Anytime that we see a level of support that looks like this, we are on the lookout. Okay? Be aware. Anytime you see a level of support that's going like this, yeah, you're going to need to note such. We like volatility expression. So that's the oddity of this, is that when it's really compressed and with anything that's normal, support trying to hold on that coil. But we're really looking forward to volatility that has a decent level of support and descending, but descending, yes. We don't want it flat. We want it descending level of resistance. There's a better profit equation if we have an expectation of getting back to a line of resistance, which this pattern offers high probabilities. We have a better expectation of getting back to that line of resistance at a price that is more profitable than if we are stuck in this specific, real severely sloped level of resistance and support. Getting back to this level of resistance does not do us much good. Okay, so we note that as opposed to this level of resistance, a lot of profit swinging back up to this level of resistance. This is so steeply oriented that a big capitulation to the downside has the bulls on warning that a recovery to a really steeply sloped level of resistance could be unfavorable, right? It's not an ideal we'd like to really normally participate in. With that said, what's being lined out on Tesla? We would say that this is being lined out on Tesla and is trying to hold, okay? Now, we don't have, let me look at the specific wicks. Slightly rising, so probably on a specific time frame, we do have a flat top resistance on a time frame. The notion that we have an ascending triangulation with a variable top line resistance. We like the flat top resistance. I know that we have on a specific time frame, I'm going to say this, because we have a differential on the wicks, please pay attention. Because we have a differential on the wicks, meaning we have a differential line to wicks. We have a rising level of resistance here on the wicks, okay? And on the lines, we have a descending line of resistance. That tells me that there is a time frame between this level of variability. There is a time frame wherein that distinction will go away, okay? Is it a primary time frame? Do we have to hunt for it? Just understand that because there's a differential of the candle wicks, this is a little bit more advanced in terms of the conceptual framework of it. We haven't really discussed it much, maybe a few times, but a differential level of resistance rising, level of resistance falling on the wicks to the lines respectively tells me that there is a time frame wherein this is lined out that may need to be hunted for, but with a flat top resistance, okay? So that dynamic is in play with a nearly flat top resistance on the lines here on the minute. Now, it may be something, you'll see just a little bit more or less variation on the 3 minute. Again, it may need to be hunted. It may be a really particular level of resistance that would need to be brought into the framework of. You're seeing a lot of near flat tops here, right? So they're slightly descending. So we have this in play, and just note that differential on the wicks, boom, right? That volatility shot to the upside. Compromising and providing targets to the downside would be the flat bottom support. Bottom line, where are orders? Here and where? They are here, and also just how you saw a trade on the 23.6 on NVDA, you got it right. And what played a big important role on that? The cap line, right? The cap line was that key wake-up call consideration. But yeah, you've got your targets to the downside. So it is not a mystery as to, I'm going to say the trades aren't a mystery. You know that. The patterns aren't a mystery. We're going to let the market unfold a little bit, spend a couple of hours today being with you guys because it's Friday. Maybe we don't get to hang out exactly today, but we spend some more time as a group in VIP. And we're excited. Let me go into like the 1 minute here on specific NVIDIA and see how we are going with this over the minute up to the target, down under the 20, and boom, down to the target. These are micro moves. You see the specific, you see the specifics here in terms of a move to the upside, 0.25%. These are small moves. As you see, the specific tactic in play that we focus on frequently, you need to understand that these are being traded, actively being traded. So as you look at your potential to participate in the market, ideally have some patience with yourself, okay? Don't be over involved until you are, I'm gonna say this, until you are consistent 4 trades in a row. Don't even think about raising your level of involvement. I tell people and I deal with people of all wealth categories, and if you learn to stack quarters, literal quarters into a literal dollar, okay? And for some of you, many of you, if not all of you, you need more participation than that to even pay attention, right? You don't want to create a habit of not even paying attention and not caring about your trades. But the quarters, for many people, turn into or are $250,000. And ask the guy trading with $250,000 if he's concerned about letting that accumulate into $1 million. Can he change $250,000 quarters into $1 million? It's the same question. Can you change, or can you turn actual quarters, can you stack quarters into a dollar? When you can do that consistently, right, the equation makes sense, the conditions are right for you to participate at some potential higher levels. Challenge that level of consistency if it still works at a higher dynamic. If not, what needs to be added? I point you to Murphy. You guys know, financial advice, not here. But what am I going to refer you to is where all the pro traders go to school. Take their classes, spend some time with them. New York Institute of Finance. We believe they're the best in town for a reason. We've done our homework. Hope you guys are doing well. Pleasure to spend some time with you today. What do we have? Come on. This is always the uncomfortable spot here. I'm just going to mark it and tag it on NVIDIA, right? Now, we do note on NVIDIA, the specific, we're going to note this, is that we have a decent level of volume, okay, on that breakdown. We had a decent level of volume to the downside. I think we were looking at the, was a 4-hourly or otherwise. We've been through that diagnostic. In terms of volume to the downside, I may have to replay that on which time frame it's really most significant or relevant. Let's go there on the 30-minute. Decent pour down in terms of the volatility or the volume to the downside. We want this to be mitigated in terms of any large expression of volume, okay, can mitigate a return to the upside. If you have a strong move of volume to the downside, it can mitigate an expectation of a return to the upside. Just consider such as these targets are engaging below and the traders are actively viewing and assessing this return to potential here. Just be aware of the fact that you're going to need to consider that volume dynamic. It is in play. It's in play to an extent now, given the preceding analytic that we did on it. So it's not a foregone conclusion that, well, hey, we're down on light volume, no problem. There's a bit of volume in the equation that we're currently looking at. And congrats to anyone who hit the 23.6 flash trades. Not a big trade. That's a level of interest though that we defined early, and nice to see that move. And just looking, we will have some targets here. This is a nice, actually on the 3-minute we do have, don't we? The 3-minute is nearly perfect on that flat top resistance. So let's do this. Let's draw this out before we leave on that 3-minute. We found it. You got to hunt these in terms of flat top. We had variable tops and variable time frames. To say, well, I have a flat top on one time frame. Does it save the day? If you have consistency and confirmation across multiple time frames, then you've got consistency and confirmation across multiple time frames. Let's do this. It will add a bit of a different dynamic and challenge to you all. If you're looking extensions, draw top to bottom. If you want your extensions and targets down, okay? Draw top, click one to bottom, click. If you want your extensions down, then draw to the point of breakout. I'm gonna leave these up to the extent I may have them. I will satchel them just about right here. I'm also interested in this dynamic here, as I'm not too crazy about that bear flag, the dynamics not having a strong flagpole. What I'm gonna say is I'm personally interested to see how this flat top on the 3-minute with ascending line of support, which may be specific and we could do some additional work, but I wanna let you guys go. Looking at the framework of the ascending triangulation and target to the downside, okay? And let's review, and we will in the back, the specific dynamics in terms of the expectations and completions to the downside and the percentage with which we're going to reach the full target. We had an opportunity to take on, Tesla in terms of a long up and over at a maximum probability today. That was the hit today that just killed it right into the price target mentioned yesterday, 278. Boom. Okay. So to the extent that we're in an equivalent opportunity to the downside, to the extent it requires additional assessment, no problem. But to the extent that there's any pattern in play which would demonstrate that we're at a maximum probability or maximum probability based on a pattern completion to the 50% on the ascending triangle, I want to note that that is in play, okay? If we have one pattern in play and we're at max probability, and we have one pattern in play, simple and easy as the road. Easy decisions get made. If we have a multitude of patterns in play, you need to understand, again, maybe time to back off and at least recognize this is not the simplest trade that I'm going to engage in all week, right? And it is Friday. We've had some great trades. We'll continue to have great trades. And congratulations to everybody who slammed into the market this week. It's been a lot of fun. We will do it again next week. I look forward to it. I know you all do as well. Let's see if we have, why is my 15-minute down here? Make sure your charts are set up. Please set your charts up. Get excited about next week. We have this on NVIDIA is a big deal. You're literally, as we're looking at that micro right now, and I'm just pulling into that specific descending triangle framework, like where are we at a max probability before I leave? You got to give bulls something to chew on, because this is the level. This is a big, important line in the sand here for NVIDIA, okay? It just is. It's compromised by some lower targets. Great trading, great opportunities to trade here. Just never overexposed in the market. You know that. Ready to double, triple down at any point in time. And looking at the specifics here, just this is a critical moment for NVIDIA, the market leader. It is. So if I'm going to find anything that matches up with an excuse or argument as to why we should be involved here on the daily, right? A little bit of give down into this level and at about that, what is this, 438, 9, 7? But pushing down much below as we were looking at this for this level of support. I'm going to highlight, just for the bull's sake, something that can pick us up in this zone nearly immediately. Yes, nearly immediately. So for the bulls who want that, that is yours to digest, along with the compromised features of, and let's just go through this, along with the compromised features of the specific, let's say the most aggressive would be the most aggressive. You notice I left that out, okay? In terms of the most aggressive, you're looking at the ascending triangulation, okay? Mid-level aggression, looking here in terms of the specific red featured coil, okay? These are in terms of targets to the downside. In terms of the most conservative, we'd be looking at these targets on your blue specific coil there, okay? The larger the pattern in play, the higher the amplitude, the more aggressive to the downside. And so when I say aggressive, that's really from the point of the specific bulls, i.e. longs charging in, right? When I say more aggressive, what I'm saying is really, and I'm referring to the bulls, so I have a bit of a bias on it, but I'm referring to the notion that it's time to hammer into NVIDIA. Let's hammer in. We're at max probability. Let's go ahead and hammer into it for a recoup play to our target of choice. Okay, so you have really, today is a day where you have three specific options, and your character is going to literally determine, there are three valid answers here in terms of how aggressive or conservative you want to be in the market. There's even a mid-level solution today to be considered. None of them are wrong. Note that we have multiple considerations for participation in the market today. You'll often find this, and along the way, without a doubt, you'll find opportunities to trade. And we've gotten just that this morning. It's been a pleasure to talk to you. This is London with Bitcoin Spike and VIP Trader. Take care. Have a great VIP weekend.